To help us understand more about Eurobond and whether this was the right decision for Kenya, I'm now joined by Andrew Kanyoto. He's a financial expert to help us understand more about this instrument, the Eurobond. It's nice to meet you.
Thank you.
Very good.
How have you been?
Yeah. So when you heard that Kenya has successfully raised over 200 billion shillings from the international market, what was the initial reaction?
For any growing economy, we definitely have to look at closing the gap, the deficit. And we cannot run away from borrowing. The big question comes, and what kind of borrowing do we do? Do we go for concessionary borrowing, or do we go for debt? In business, we'll say, do we go for debt or do we go for equity? So for me, I'm looking at the positive side of it. It's a very good thing, the fact that he has been oversubscribed, showing there is confidence in the Kenyan economy.
Kenya shrugged off Moody's downgrade and alarmed Bretton Woods institutions to raise 200 billion shillings through a second Eurobond. The offer that received more than 1.4 trillion shillings in bids raised the profile of Kenya on the global stage with a 30-year offer. The National Treasury is expected to give final details of the offer next week once officials return from London. Financial expert Andrew Kanyoto says the strong appetite for foreign investors is a testament of confidence with the Kenyan economy. Kanyoto says due to the payment period, the Eurobond is the best instrument for Kenya to borrow on the international market.
There is nothing wrong with it, right? I would assume the process was well thought through. What are the interest rates? As opposed to going to concessionary loans. Those concessionary loans at times comes with certain conditions, terms and conditions, which if you look at the bigger picture, it's better to go just for the debt, direct debt. Of course, there are other factors which comes, especially the cost. What is the cost of the borrowing, right? Vis-a-vis the benefit of where we are investing the money. So yes, I would assume the government has looked at all that by the time they are borrowing, and for them to go for the second tranche of borrowing, it makes sense. Definitely the pros were more than the cons.
The bond with a 10-year and 30 maturity attracts a fixed yield of 7.25 and 8.25% respectively. This even as Deputy President William Ruto said, Kenya will continue to tap the international market to raise funds for capital expenditure.
Sisi kama serikali ya Kenya ni watu waadilifu. Tukienda kukopa, tunakopa kama tumepima vizuri ya kwamba hizi pesa zitatumika kujenga reli, kujenga barabara, kuweka damu kama hii tunataka kujenga hapa Karemenu, kuhakikisha kwamba watoto wetu wanasoma, stima imeunganisha, na pia tumepima ya kwamba tuko na uwezo wa kulipa. Hatuwezi kwenda kukopa pesa ati ovyo ovyo.
The National Treasury says the funds raised in the second offer will go towards debt repayment and infrastructure development. This is the second Eurobond from Kenya after the first offer in 2014. O'Brien Kimen for Business News Hour.